Monday, the 22nd of November, European equities on the front foot, driven largely by M&A rather than news on the Fed, but the euro certainly weakening on that news. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
So 29 minutes to go until the end of trading here in Europe. Where are we? Let me update you. We are certainly seeing weakness in the currency market. The dollar is on the front foot. The euro trading with a 112 handle, 112.48. Equities, though, are bid. But actually, I would argue rather than the Fed news, it's M&A news. The telecom sector is leading the charge here on the back of the KKR news surrounding Telecom Italia. That's what's pushing us forward here. The stock 600 up by 0.2%. We're also seeing crude climbing as well. We're back nearly at 80, 79.73. We're up by 1% on the price of crude. 30 minutes to go until the European close. We're going to count you down to that important moment. Alex.
Yeah, I'm glad you brought up Brent, because here in the U.S., an hour and a half in, you're now having the S&P energy sector now the performer. Second to none, though, is going to be financials, up by about 1.6%. You remove Lyle Brainerd from running for the Fed chair of supervision, and plus you have higher yield, so a nice double whammy when it comes to financials. Two-year yield here really popping by 5 basis points. It's the belly and the front end that are getting hit the hardest here, as you can see what's happening to the 530 curve there. Okay, the dollar, you mentioned it, up by 0.3%. The Bloomberg Dollar Index, it feels like a very typical, we might see a taper pushed forward a little earlier rather than later, potentially, and you have another rate hike being priced in for November of 2022. Rates, dollar, equities reacting in kind, Guy.
Absolutely. Let's carry on the conversation surrounding this important moment in terms of the leadership shift at the Fed. Let's bring in Bloomberg's international economics and policy correspondent, Michael McKee. Mike, Peter Orszag described this as a dream team. It took a long time to get to the dream team, i.e. Fed and Brainard. Now that we're here, what changes?
Not a whole lot, which is pretty much what Joe Biden wants, I think. This is best described as a dog bites man nomination. No real surprise other than Brainard did not end up with the supervisory role. But you've got the current Fed chairman, who's won widespread praise for his reaction to the pandemic and how he's kept the economy afloat. And you have a governor who has seen as basically having the same monetary policy views as the chair, who's being elevated. So it gives Wall Street, the word that's going to be overused as much as transitory, it gives Wall Street continuity. And there is going to be at least happiness that there's not going to be any surprises coming next year in the making of monetary policy.
All right, Mike, thanks a lot. Where's Michael McKee joining us for the update there on the Fed. Want to bring in another kind of voice here. Peter Pratt is former ECB chief economist. Peter, can you put on your old ECB hat? If you have a renomination, you had that consistency, then you also elevate Lyle Brainerd to the Fed chair. And I just want to get your take on what's your reaction on this? What do you think it means for monetary policy?
I think the first things to say is that the relationships between the ECB and the Fed are really excellent. So it's not only a question of changing one person or the other. This is a relatively long tradition between the two institutions. Now, of course, the change that you have with the vice president, well, Lyle Brainerd, is very well known in Europe. She's very international profile. She participates in a number of international meetings. So I personally met her several times, many times, in the framework of the OECD, for example. So I think that we have someone as a vice president knowing Europe very well. And I think the team with Jay Powell, the continuity you have with the president, with Lyle Brainerd as vice president, I think is a very, very good news for Europe. Now, I would not exaggerate, it's not a brutal transition, I think. And as I said, I mean, the relationship are really excellent. And I would say this is good news, but in the continuity of, what we have seen before.
There was a focus within the President of the United States statements that I think is worth dwelling on, Peter, and that was inflation, then the labor market. Clearly, the focus in the United States has now shifted to inflation fighting. What can we take away from this new team in terms of where you think the trajectory is for monetary policy in the United States. Some are arguing that we need an accelerated taper and we need earlier rate hikes. What are your thoughts on what is happening in the US?
Well, I'm in the camp of those saying that, the Fed will have to accelerate the tapering. We will see for the rates. But I mean, for me, it looks obvious that the tapering will have to come sooner, and then probably also the rate hikes. The personal relationships between, the Fed leadership and the ECB is quite important because, Europe is in a different situation from the US. Although inflation has picked up, has moved up, I think the situation is quite different. So you are at a delicate moment because the US is going to accelerate the tightening of policy, while in Europe it will lag, in terms of, policy movements. And so I think it's quite important because you never know, how will financial markets react. And so the personal relationships that you have between the two institutions are extremely important. It's not just, to say that you have institutional relationship, in meetings and all that, but the trust you have in your counterparties is extremely important. And I think we have precisely that with Jay Powell and Lyle Brainard. So I think it's good news for Europe. But as I said, the previous team also was pretty good.
Peter, to your point, how long do you think an ECB and a Fed can diverge?
That's a very good question. First, as you know, we have a new wave of infections in Europe, and it's really worrisome. It's not only because, when you look at the figures, people, having just sort of mild symptoms of COVID, but I mean, it has a big impact because the number of cases, especially in Germany, Austria, Belgium, Netherlands, number of countries is very high. And so it has an impact on the economy. It will delay probably the, next move in monetary policy. So probably you will have a divergence in the coming months, an increased divergence in the coming months between the US and Europe. And that's what Forex markets, have understood that, since a few weeks already. So I think it's very important in terms of communication from both institutions that they understand very well the different relative situations. And communication will be extremely important, especially for Forex markets. So what will be the difference remains to be seen. But as you know, some of the exceptional measures in Europe will be terminated in March of next year, so a few months from now. But in these 3 months, a lot can happen. I think we will going to see all these messages more hawkish in the US, and probably because of the COVID reinfection rate that you see now, that you will get probably some dovish signals in Europe. So currency markets and financial markets may be quite volatile.
Okay, well, let's talk about that. We've got a significantly cheaper euro. Do you think the ECB will welcome that? And you talk about what is going to happen with the end of PEP. I'm wondering, with what we're seeing in terms of the COVID cases at the moment, whether that means that the reforms we're going to see to the APP and the other programs are likely to have a more dovish tilt to them, i.e. more of kind of what happened with PEP transferring back into those other programs.
It is clear that the ECB is going to try to keep, a maximum optionality. But I think the base case, is basically, as Christine Lagarde has been saying recently, is basically to implement, the strategy review. That means that you want to, be sure that you core inflation expectations at a high level. The situation in Europe has been quite different from the US because we started in Europe with too low inflation for too long, while the US was not that far away from its objective. So I think the bias, the monetary bias, will still remain on the dovish side in Europe for a while. But this doesn't exclude the fact that, the PEP, some of the exceptional measures will be terminated in March, actually. But the ECB will certainly want to avoid any cliff effect, from the move of policy. So the COVID infections are going to influence the economy, but not as dramatically as it was before. But still, it will have an impact. And I think in relative terms with the United States, there's probably a difference, in the coming months, that will lead to some volatility between the two regions. And it's very important in these sort of circumstances to have good communication channels between the two institutions.
What about within the ECB? The Bundesbank this morning warning that we could see a spike in German inflation up to around 6%. Inflation is not welcome in Germany. There is an expectation that maybe inflation in Germany stays at 3% plus for a long period of time. Peter, what kind of tension is that going to create within the Governing Council?
I think the Governing Council is probably more uncertain than it was some time ago, because, you know, these high figures that you mentioned, especially in Germany, but in a few other countries, are going to last, you know, probably until mid of next year. That's a long period of time. Even if you believe, you know, that inflation is going to go down, you know, in the second half of next year, it is clear that during this 6 to 7 months, you know, period, there will be sort of high pressure on Governing Council members to tighten, actually. I think they're going to resist that broadly, but it's an element indeed, and the communication sometimes shows that there are divergent views within the Governing Council. But I think the view that has been expressed by Christine Lagarde a few days ago is going to dominate. That means that, you know, you start from a position which is very different from the US, with too low inflation for too long period of time. And I think really you have to seize this opportunity to re-anchor your inflation expectations. But I fully admit that there are risks related to that strategy.
Peter, it's always great to talk to you on these big days. Thank you very much indeed for taking some time to join us. Peter Praet, former ECB's chief economist. What have we got coming up for you? Protests erupting across Europe this weekend as new COVID-19 lockdowns are put in place. Emma Hodcroft is going to be joining us from the University of Bern. She's a molecular epidemiologist. We'll talk to her about what's happening with the virus. We'll get the wider picture with the politics overlaid with Junie Debsey, Carnegie Europe non-resident senior fellow. She's going to be talking to us about how governments are handling this situation. That's all coming up. This is Bloomberg. Protests over the weekend across Europe, some of them violent, some of them peaceful, but the message clear. The anti-lockdown protesters have basically had enough as we see the reimposition of lockdowns in many places. In the UK, though, which has been suffering high cases throughout the winter, the Prime Minister Boris Johnson reiterating that actually there is no need for a shutdown here.
But at the moment, we see nothing in the data to say that we need to move from Plan A to Plan B or any other plan. So that's where we are at present. The best single thing you can all do is get your booster.
The Prime Minister speaking a little bit earlier on. Joining us now, Emma Hodcroft, University of Bern molecular epidemiologist. Emma, what do you make of the latest numbers? The rate of change obviously has picked up significantly. We're now starting to therefore have to see physical lockdowns being put back in place. Where do the numbers go next, do you think?
So it was almost 2 weeks ago that we last spoke, and it's incredible what has changed since then. We've seen cases really skyrocket in so many countries across Europe, and governments scrambling to figure out whether they should do something now or wait, and what that should be. I do think this is a worrying trend. We're still very early into the long, cold period that is winter, that is people being inside more, keeping windows closed, and we're already seeing this sharp spike. Right now, I think the question really is for many governments, what are we going to do, if anything? And I think we have to be really cautious here. We've got Christmas coming up. That's a big holiday, of course, in Europe and in North America. And a lot of people are going to want to make up for family and friends they didn't see last year. Can we keep Christmas safe if we take earlier action now? If we delay, where will that leave us by the middle and end of December?
What is the right action to take to prevent that happening? As in, will lockdowns materially make a difference right now? Will compulsory vaccines make a real impact right now?
So this is a great question. And I think for different countries, we're in different states. Some countries like the UK have essentially no restrictions left. Some countries like Austria are, of course, heading into a pretty harsh lockdown. One thing I think governments should be keeping in mind is to let the science guide them. So we know, for example, that SARS-CoV-2 is definitely airborne. We know outdoor activities are probably not the riskiest, especially if you can keep people spaced apart and wearing masks. We also know that schools are high priority. We don't want to be shutting those down. So I think then we have to explore what can we do. asking people to work from home if at all possible, asking people to make sure they've got vaccinations, reintroducing masking in public spaces if it's not already there, and of course, continuing to drive, get your vaccine.
Emma, but if we now put ourselves in a position where the virus is running too fast for a vaccination program to catch up?
It's certainly one of the problem with vaccines that if you haven't even had your first dose, then of course you won't benefit from full protection for a few weeks. But the way cases are rising right now, that's still worth doing because any protection is better than none. And I don't think we'll be out of the woods in just a few weeks. So this is something that you'll benefit from, even if you don't have protection until a month or 2 months from now. But I do think that, yes, we also have to be focusing on shorter term strategies. What can we do to bring some of these case numbers that are almost vertical lines right now in some countries? What can we do to get these to level off? While, of course, trying to maintain as least disruption to our society and economy, but also making sure that we aren't just setting ourselves up by delaying for even more disruption later.
Emma, on that point, we also know that if you've already had your vaccination, your full vaccination, immunity does wane. What is the booster take up right now?
So the booster, the availability is really variable between countries. Some places in Europe, like the UK, and of course in the USA, it's now available to everyone. And if it's been more than 6 months since your vaccination and it's available to you, especially if you're vulnerable or elderly, please go get it. It pushes the protection back up to those high 90s numbers that we want to see. For other countries, though, there's still some disparity in who can get boosters. Some places have approved it, but it's only available to some groups. In other places, they're still weighing up whether this is a strategy they want to go down. I think it will become very common, but for most people, it's also important to remember that if you had your second vaccine within 2, 3, 4 months ago, you're probably still okay. It's really the longer term, 6 months and onward, that it's really worth getting that booster shot.
Emma, you talked about Christmas, the mingling that we're going to see over the festive period. Where do you think we are on track for in terms of the numbers that we're likely to see over the next 6-8 weeks?
If we don't do anything now, I think we are heading in many European countries into a really worrying situation. One thing we have to keep in mind is that deaths and hospitalizations always lag after cases. So we can look at Austria. Their hospitals are totally overwhelmed right now, but these are people that probably got infected 3 or 4 weeks ago. Case numbers are still sky high, and the people infected today that will be in hospital, they won't be there for 3 or 4 more weeks. So we have to be thinking ahead. If you wait until your hospitals are overwhelmed to act, you're going to have a long period of your hospitals being overwhelmed before you can put in action to turn that around. So you have to be watching those trajectories early and considering whether there's something you can do now to make sure you don't get into that position in the first place.
Emma, thanks so much. We love the perspective. Emma Huncroft, University of Bern, molecular epidemiologist. Thank you very much. It's hard. Words are hard. Okay.
At least she's not an anesthesiologist.
Oh, I knew it. I knew that was coming. I hope my husband's watching. A word I can never say, anesthesiologist. Oh. Did I just say it?
Yeah, I think you got it right.
Oh my God, that was the first time ever. Okay, let's stay with this topic. Because over in Germany, Chancellor Angela Merkel says the current COVID spike is, quote, worse than anything so far. The country's health minister, Jens Spahn, issued a stern warning.
Probably by the end of winter, almost everyone in Germany, it might be cynical to say, will be either vaccinated, cured, or dead. But that really is the case. This is very possible with the extremely infectious Delta variant.
Pretty stark warning there. Joining us now, Judy Dempsey, Carnegie Europe non-resident senior fellow. Judy, it feels like the debate in Germany now is whether to make vaccinations compulsory. Where do you think that argument is?
Well, the argument is wavering, as you can imagine. This is Germany. They don't want to be so authoritarian about this. And secondly, we have the coalition, the new coalition about to be agreed on the new government in the coming days, and one of the partners of the coalition, the Liberal Democrats, are very much against a compulsory element. But I think it's creeping in. If you just look at the numbers in some of the states, particularly Saxony, there was a case last week, figures 1,200 patients in hospital, in intensive care. Out of that number, only 63 were vaccinated. I mean, we're talking about some of these Eastern German states where the vaccination level is so low. So there's big pressure, and Austria set the precedent for going for compulsory vaccination starting February 1st.
Judy, do you think the transition of power has meant that the government has been slow to react? Do you think the transition in power has put Germany at a disadvantage?
I don't think so. There's no doubt that the outgoing government is a bit slow on the uptake. And what Jens Spahn, the health minister, said today, he was actually only echoing what the head of the Robert Koch Institute, this is the big medical authority, said last week. And he was really open and critical about the slow uptake by the government. The figures are actually quite alarming. And I'm surprised how slow the outgoing government is, and the incoming coalition, clearly they don't have the mandate to do everything that they want to do, but there's a real sense of urgency now. The casualties are rising, intensive beds, there's very few left, and especially in states like Brandenburg, Saxony, and other states, it's very, very critical. Interestingly, during the first wave of the COVID, the Italians sent the patients up to Germany, and now Germany is sending some of their patients down to Italy because there aren't enough intensive care beds.
Judy, who is going to wind up leading the government and be the key officials within power in Germany? And are they going to inspire their same kind of confidence, for example, that Angela Merkel did in the beginning of COVID?
They have to. This is incredibly critical. And as your two speakers said, it's about the economy, it's about confidence, it's about opposition to COVID, vaccinations. The new government has to really hit the ground running. And the biggest agenda is actually curbing this virus, and above all, getting people vaccinated. This demands a huge communications program, a huge effort to get so many, 12 million haven't been vaccinated yet. And we're not talking about children, 12 million out of a population of just 80 million. There's a huge number of vaccination deniers, and they have to be brought on board.
Judy, just looking ahead, Germany faces a number of different challenges right now for the new administration coming in. I'm looking forward to seeing what a Finance Minister Lindner is going to do with them. You've just talked about the importance of the economy. We need to control the virus. But the Bundesbank today warning that Germany could see 6% plus inflation over the next few months, and then it's going to rest at a relatively elevated level. What is the debate in Germany right now about that? Germany in the past, high inflation, we've seen it. The country has therefore has an allergic reaction when inflation starts to spike. What do you think the reaction is going to look like this time?
I think the reaction is pretty critical at the moment, actually. I was at the gas pumps today, and I was paying, nearly 180 cents for a litre of gas. I mean, the inflation is there. People are very, very worried about it. It hasn't got to the public complaint level, but with high energy prices feeding into all elements of domestic prices is going to be a big issue. And assuming that Christian Lindner gets the finance ministry, this is going to be a big issue to tackle. The people are going to get, the population is going to get very, very heavy bills before Christmas. And this is the last thing the new coalition wants. And this is the last thing that people want as a Christmas present.
Judy, quickly, in about 45 seconds, do you think that there is going to be the will for more fiscal and budgetary help if we do have to go for, say, regional lockdowns?
I think there has to be, yes. The small businesses are really suffering, hotels, small retailers and so on. There'll have to be some kind of prolonged assistance perhaps for this. There's no doubt about this. I've known so many small people, small companies who are just folding at the moment, are just waiting for positive signs to get on their feet and start running again. They can't do that at the moment.
Judy, always a pleasure. Thank you very much indeed for your analysis today. Lots of ground to cover. Judy Dempsey, Carnegie Europe non-resident senior fellow. Thank you very much indeed. Equity markets are about to shut up shop here in Europe. A number of different factors at play. We've got M&A news with Telecom Italia. We've got the Fed news and the reappointment of Jay Powell. And we've got the COVID news to factor in as well. All of that coming together in terms of the weighing machine that is the European equity markets. FTSE 100 up by 0.6%. We're seeing miners on the front foot. The DAX is a little flat. The CAC is a little flat as well. But nevertheless, in aggregate, Stock 600 just creeping up a little bit. We'll deal with the details. We'll talk about some of the individual names. That's coming up next. The European close is up shortly. So we're wrapping up the Monday session here in Europe for equities, counting you down through the close into the auction. In terms of the regular session, this is kind of where we are. FTSE on the front foot. The miners are actually leading Europe from a sector point of view, not the gold miners, the big integrated miners, and as a result of which London is getting something of a lift. The DAX is actually down today. But it's interesting, actually, because Deutsche Telekom is bid. The Telecom Italia story has really lifted the telecom sector broadly across Europe. So DT is bid. But actually, some of the stay-at-home stocks, despite what is happening with COVID, just fading. So Delivery Hero, big day Friday, just fading that move a little bit here today. The KKR on absolutely flat as we come through the close. Austria bouncing back as well after the big sell-off we saw Friday. Let's talk about what we are seeing when it comes to the session and how we've developed. Clearly, we've been watching events over in the United States and what's been happening with the Fed. We got that move, that kind of lift up, not to session highs, but now we're just beginning to fade it. But look at that. The Stock 600 absolutely unchanged on the session. 486 is where we're going to wrap up the day. In terms of the sectors, as I mentioned, two key sectors that have really driven things today. There's the mining sector, the basic resources up by 1.85%. But then you've got the telecom sector as well, being lifted by Telecom Italia, that KKR bid. We'll talk about that in more detail in just a moment. And then the cars are actually moving higher as well today. Stocks like BMW actually catching a reasonable bid. So that sector getting a lift. Technology, travel and leisure, real estate, that's where the weakness is coming through in terms of the sector performance on the downside. Ericsson, certainly one of the factors behind that telecom move, down by 5.6% today. The Vonage bid being seen as being expensive, and as a result of which, I think it's really kind of taking a bit of a knock as a result of that. Biggest deal they've done in a very long time. Marks and Spencer, we come on to the M&A story. Pieces in the weekend papers here in the UK about potentially an Apollo bid. The UK grocery sector firmly in focus right now. That stock catching a bid. But the real news from an M&A front is the potential takeouts, the take private of Telecom Italia by KKR. The stock really responding to it. We're up by 30%, Alex.
All right, let's get more on that. Telecom Italia. Tommaso Ebhardt, Bloomberg's Milan bureau chief, is with us now. So that bid is about $12.2 billion, just over 10 billion euros. Is that enough to get it done?
That's a good question. It's too early to answer. So for sure, there's a 46% premium over the price of the stock at the Friday closing. But today, as you saw, the shares didn't get there. They fell short, so the share rose about 30% during the day. Why? Because there's still uncertainty on how if the deal will go ahead or not, because Telecom Italia, biggest investor Vivendi, is clearly opposing the deal. As we reported last night, the French company, which bought Telecom Italia at €1 a share, clearly can't sell at half the price they paid.
Okay, what about, how do you think Mario Draghi views this deal?
Actually, the first response from the government were quite positive. The tone of a statement that was sent last night was quite positive. And as we speak, we just run a story saying that Italy may boost a state lender role at Telecom Italia amid the KKR bid. So it looks like there could be a way for the government to let the Telecom Italia network be spun off from the service companies thanks to the deal.
Why does KKR want this company?
Because the landline network is now a precious asset for Telecom Italia. There are billion euros of investment coming from the EU Recovery Fund to transfer Telecom Italia grid into a neutral broadband network, and there is a chance to transfer the network into an infrastructure company, so a utility with a high yield and a stable revenue and profit.
Do we know what the board thinks? Has there been any discussion with the board in terms of what comes next? I know they're looking for a period of due diligence, but KKR knows this company well.
So yes, KKR is already the only other big investor in the secondary network of Telecom Italia. They invested last year for almost a 40% stake in the secondary grid. The board met yesterday essentially to receive the offer. We know there is a board. The board is going to meet again on Friday, but this board is actually due to the fact that Vivendi is seeking to oust the CEO Gubitosi amid the bid. So there's a bit of turmoil over there. So I can't really tell you exactly now if the board will essentially support or not the bid. We'll also have to see if Telecom Italia CEO will resist the pressure from Vivendi to oust him.
Tommaso, always a pleasure. Thank you very much indeed. Bloomberg's Tommaso Ebhardt on the Telecom Italia story today. Much more, it sounds like, still to come in this narrative. Quick look at where European stocks are wrapping up the day, just to get an idea of what is going on. Not much action during the auction. These are the final numbers. DAX dipping a bit today. CAC 40 fairly flat. London outperforming as a result of the miners. Alex.
All right, well, coming up, we're going to go back to that Fed story. Fed Chair Jay Powell nominated for a second term. We'll speak to Libby Cantrell, PIMCO head of public policy, will be joining us next, and sort of how this all went down and where this leaves President Biden. This is Bloomberg. This is Bloomberg Markets European Close. You are looking at a live shot of the principal room. Coming up, Raphael Bostic, Atlanta Fed president, will be joining television at 6 p.m. in New York, 11 p.m. in London, 7 a.m. in Hong Kong. This is Bloomberg.
So we finally got a decision. It's taken a long time to get here, but President Biden has now made a decision renominating Fed Chair Jay Powell for a second 4-year term, elevating Lael Brainard, importantly, to the vice chair position. Libby Cantrell, PIMCO head of public policy, says the president's pick was the path of least resistance for the White House. She joins us now. Path of least resistance, does that make it the right decision?
I mean, for President Biden, absolutely. As we've noted, Jay Powell will easily get confirmed, has deep connections on both sides of the aisle. Of course, was confirmed as Fed chair back in 2018 by a vote of 84 senators, so pretty unprecedented in this very polarized environment. And given that that Jay Powell was originally a President Biden pick as Fed governor, this should assuage both sides. So for absolutely, from a political perspective, Guy, this was the path of least resistance. This is what the market was expecting, and good to, in some ways, just to give what the market was expecting, and somebody who I think, is very credible on both sides of the aisle.
Libby, how does this help or hurt or change the dynamic for President Biden and his human infrastructure bill?
Well, in some ways, this sort of clears the decks. I think that if, it was speculated, of course, that Governor Brainard was also being considered for the Fed chair, even though she was relatively easily confirmed as governor back in 2014. It looked like she would have a much tougher confirmation battle with most Republicans saying that they wouldn't have voted for her, even some moderate Democrats questioning that choice. So in many ways, these two, the Jay Powell as number one, Brainard as number two, kind of clears the decks in terms of Fed personnel, the confirmation process, and then allows the White House to focus on the Build Back Better agenda and, importantly, Alex, the debt ceiling and a government funding bill. This is going to be a very busy month of December for Washington. And, given sort of choosing Powell, again, path of least resistance, again, I think eases the way for those issues.
Why did it take so long? What do we know about what happened here? And what role did Senator Manchin play in this?
There was a lot of mystery. There was a lot of intrigue. There were many rumors, lots of speculation. I think, the reality here is that this White House has been busy with many other things. Of course, the Build Back Better bill, which has been negotiated in public over the last 8 months. Also, the bipartisan infrastructure framework, the BIF, as well as, other personnel selection, as well as some foreign policy issues to boot. So, I think in some ways this is just indicative of the fact that they had a full plate, but also it is representative of the fact that progressives and moderate Democrats don't necessarily sort of see eye to eye on all of these personnel choices. Mm-hmm. And clearly, there were some progressive Democrats who were really pushing against a Powell renomination. So in some ways, though, this is kind of assuaging both sides by keeping Powell as number one, again, kind of honoring that norm that was established in the early 1980s of presidents, renominating the existing Fed chair that, of course, President Trump broke, but then also kind of assuaging progressives by putting Brainard in the number two spot.
The path of least resistance for the Fed has been sort of prioritizing unemployment over inflation. Then over the weekend, there was a CBS YouGov poll out on Sunday that showed that 2/3 of Americans disapproved of the president's handling of inflation, and that 82% of those respondents thought that everything they buy is costing more. And I wonder, does this shakeup at all go anywhere towards putting inflation ahead of unemployment?
Yeah, well, clearly, inflation, if not an economic issue, is becoming a political issue. And I think the White House is very well aware of that. Now, I think Powell and Brainerd have both been very clear that while they are focused on the sort of maximum employment part of the dual part mandate, inflation is also going to be important. So I don't think we should think that they are necessarily over prioritizing, employment over inflation.
Let me just jump in because something's just happened which actually speaks to this whole narrative. Bloomberg is reporting that the US is poised to release oil from the strategic reserve. It's going to do so in conjunction with other nations. What is your reaction to that? Does that speak of panic within the administration? They have to do something, so this is what they're going to do. How worried is the administration about the inflation story that Alex just laid out?
Well, look, I think this is a recognition that this is certainly a political issue, maybe if not an economic issue for the White House. Now, I think, objectively releasing oil from the SPR will really, have an incremental impact, really, if any, honestly. Maybe moving in conjunction with other countries will have a more significant one, but will still likely be marginal. But it does speak to the fact that this White House is focused on inflation and will try to pull there are very few levers, honestly, that the White House can. Of course, the SPR, maybe reevaluating some of the existing tariffs, maybe trying to address some of the supply chain issues. But again, I think that the real reality here is economically, they have sort of limited ability to impact inflation outside of course, who sits on the Fed.
Yeah, Goldman's also saying that, the market's already priced 100 million barrels of oil to be released. Okay, last question then. Does President Biden run again in 2022? 2024?
2024, yeah.
I don't know.
Yeah, no, that's all right. I know. It feels like election season already. Who knows? I think that the all indications are that he is likely going to run again. But, even though this feels right around the corner, we're still 3 years out from the general election. So a lot can happen in between now and then. So I think we should take him at his word, which is that he is likely to run again. But again, a lot can happen between now and then.
Yeah, exactly. All right, Libby, thanks a lot. Really appreciate it. Busy day. Libby Cantrell of PIMCO. Thank you. And later this afternoon, President Biden will deliver his remarks on the Federal Reserve nominees. Chair Jay Powell and Lyle Brainerd will also speak. We'll bring that to you. All right, coming up, you got U.S. equities advancing off the highs of the session, sell-off in the bond market, particularly in the front end of the belly. We're going to have more on that market reaction next. This is Bloomberg. All right, we are just about 2 hours plus into the trade of here in the U.S. You have financials and you have energy sort of outperforming here, but we are watching oil after that report that we might see an SPR release coordinated from the U.S. and other countries as early as tomorrow. We're also seeing a very strong sell-off in the front end and the belly of the bond market here. 2-year yields are up by almost 7 basis points. Let's get more reaction here. Mary Phillips, Dimensional Portfolio Management Deputy Head, joins us now. We get these headlines that were continuity is the name of the game. Fed Chair Jay Powell, Vice Chair Lyle Brainerd. We also still have a lot to come out of D.C. Does this change how you look at the Fed and markets at all?
For Dimensional, it doesn't. For Dimensional, we're going to look at that and see the consistency is great. The markets have appreciated this quite a bit from what we can tell, especially those small value stocks. But the Fed is one player out there, one important data point, but one of millions. And so that information will get incorporated, and we're going to keep doing what we're doing.
If we are going to see a more hawkish Fed, though, were we to see a faster taper, rate hikes coming through a little bit earlier, do you think the market's got that already? It's priced into the bond market. Is it priced into equities?
It's got to be priced into equities as soon as it happens. And sometimes there's uncertainty in that, but all of that information still gets into the price. I think what we like to focus on is as things are moving around and things are shaking. I know you guys were covering Telecom Italia just now. A stock like that shoots up. That's something that we're going to take in that short-term information. and investors can think of that using momentum, right? So momentum is something we use in our portfolios. It's a very short-term driver, and that's a place that you can take in that short-term information, that market movement that we know is out there. It's just not something you want to build your whole portfolio around.
So how do you then wind up using momentum? Bank of America had an interesting note out that said, quote, the mother of all bubbles is in crypto and tech remains a fat tail. So how do you play momentum and not take on the risk?
You can take on momentum. So momentum is a short-term driver. It lasts 6 to 9 months. You can either use it in making decisions day to day. So let's say we have a value stock. We focus on value stocks a lot. It's gone up. Time to sell, looking more like a growth stock. If the stock's doing great, outperforming, hold on to it for a little bit longer. And so that's how we're going to take into that short-term information into account. And then same is true on the downside. If the stock's falling like a knife, hold off buying. And so that's the way you can get that short-term information in there as opposed to a standalone strategy, because a lot of folks focus on it as dedicated. It's too expensive. It's over 100% turnover and something like that. That'd be like, getting rid of all your clothes each season and buying a completely new wardrobe. It'd be very expensive, and you better look good after it, which we haven't seen from momentum funds.
Yeah, I think we get a rejig of momentum, some of the momentum trackers later this week, as you say, quite high turnover. A lot of people view momentum as the antithesis of value, that they are the yin and yang of the investing world. Why is that wrong?
That is wrong. They do have a dance at times, but it's wrong because value and momentum actually can overlap quite a bit. As momentum stocks, you can imagine the relationship. We had news out about energy this morning. You're going to see energy stocks going, changing because of that. That can relate to the price of the stock, clearly, and that's going to be value. So a better complement to value stocks is thinking about profitability. What do you expect to receive from the company? Think over the long term, and something like that is going to offset or hedge your value exposure in a much more productive way. Momentum should be the accessory to your portfolio. It should be something, something like the paint color in the living room, perhaps, if you're buying a house. Value is going to be your foundation. Profitability can be the roof, right? Look for things that are solid and that make sense over the long term.
Yeah, I should point out the Nasdaq now rolling over down 0.4%, so losing some steam here. Same for the S&P off its highs. I want to reference back to that Bank of America note because it was really interesting in terms of how they categorized the last few years. The 2022 was a growth shock. 2021 was that inflation shock, and they see next year as a rate shock. Do you agree? And what does that highlight in terms of interesting investment opportunities?
Yeah, I think anything's our guess for 2020 or 2022 coming up here. Which year are we in? And so what we think of is broadly diversify the portfolio. Be ready for that information. It could be a rate shock, but you don't have to be subject to that in your investments. So we can be focused on getting a broadly diversified portfolio, taking into all that short-term information in a momentum strategy. But if there is a rate shock, it's okay. You can still have a good experience as an investor. You don't need to be positioning yourself around that to do so.
People often talk about Europe being value. You were referencing Telecom Italia. We do get moves like that occasionally over here, and often at the moment it feels like it's based around value stocks. How would you, when you think about portfolios, when you think about what you're doing, United States, Europe, how do we think differently about those two markets?
Yeah, it's interesting because if you look at the research, one of the great things behind it is that you can test it all over the world. And so if we look at all these, value versus profitability, momentum, all those things, they work in Europe, they work in the US. So it's really, I think, by being in all of those markets, it's really helpful because if they're working in one place, they may not be working somewhere else. And so overall, you can come out ahead. I know Europe's had headwinds over, it's flagged the US for quite some time now. So if you got that diversification and maybe there is, some kind of US rate shock, that could work out because you've got the diversification, you've got the exposure. You don't have to be subject to, trying to pick which one is going to work out for you.
It's been great to speak today. Thank you very much indeed. Mary Phillips, Dimensional Portfolio Management. Really appreciate your time. Interesting stuff. Thank you. Alex, looks like tomorrow is going to be a pretty exciting day. We've just had to deal with the Fed. We're going to have more of that a little bit later on. Obviously, we're waiting for the president to speak at 1:20. His next kind of roll of the dice appears to be an SPR release.
Mm-hmm. Yeah, so we're learning potentially that there's a coordinated SPR release. You've been mentioning sort of the OPEC plus contingent. So there's the cartel of producers. Now we have maybe a cartel of consumers. Having this kind of coordinated release is something that we haven't yet seen. I should point out that the U.S. has already been releasing some oil from reserves. So it's not just that. Does the coordination have the desired effect? Yep. Or is the verbal intervention we've already seen the last couple of weeks enough? I mean, you've had a nice rollover at this point for oil.
It's going to be fascinating to see how OPEC reacts to this, because in theory, this, at the margin, is going to throw things off a little bit. But it feels like it's only at the margin. This almost feels like this is for political purposes rather than economic impact. Mm-hmm.
Yes. But again, what's the sustained economic impact on that? Goldman Sachs was also mentioning that it's already priced in, the $8 decline that we've already seen, that they're really, if you wind up looking at the oil price now, you're looking at a severe demand shock in Europe and China and a big release. I don't think we're necessarily going to see that extreme of a move.
Nope, it's going to be fascinating to watch. But with inflation such an important political factor in DC right now, maybe just being seen to do something is important. Yeah. Maybe you don't even get that big a reaction at the price. You get a little bit of a blip, but the consumer can say, hey, the president's on our side, which is ultimately, I guess, what he's looking for. So what comes up in the next 24 hours apart from that news? After the bell, the pandemic darling Zoom out with earnings. U.S. trade rep Catherine Tai, she's in India. Alex, that's going to be a fascinating conversation as well.
And tomorrow is PMI day. We love this day. The U.S., you also have manufacturing and service composite data, and we're going to get those data as well from France, UK, Germany, and the Eurozone. Guy, really looking forward to that. And some earnings trickling out. Dollar Tree and the Gap. The Gap moved really strongly with Victoria's Secret, so it'll be interesting to see how that moves. That wraps it up for me and Guy. Coming up, it's a 2-hour special radio TV simulcast and balance of power as we await President Biden to formally announce his renomination of Fed Chair Jay Powell. Paul Krugman, Nobel laureate, will be joining David Weston. This is Bloomberg.